Good morning then everyone as we head into European trade on Tuesday the 21st of November. We'll flick across the headlines, we'll see what's going on. I will jump across to some charts now in a minute, but we watched the video yesterday. We talked about stocks higher, dollars lower, and that seems the way to go. Overnight as well. We had some RBA. We had the minutes out of Australia, but stocks rallied into the close yesterday. Dollar sold off, and that's what we would expect to continue in the coming sessions ahead. Stocks in Asia hit 2-month high, dollar on dollar defensive on Fed view. Markets believe that the Fed are done with interest rate hikes. They have believed that for a while, but it seems as if they are actually correct on this occasion. Japan's Nikkei seen rising at 35,000 by mid-2024 on earnings boost. That is probably something to keep an eye on. The Nikkei in Japan, interest rates in Japan still negative, while the rest of the world are up above 5%, or most of the rest of the GA are up above 5%, but it's kind of more of an opinionated statement rather than anything going on at the moment. Oil falls after steep gains and prospect of further OPEC plus cuts. We were talking about OPEC yesterday. Sunday they do have this coming Sunday they do have another meeting. That is another meeting that could result, or three cartel members. There was an article on Reuters yesterday suggesting that three unnamed cartel members did suggest that supply would be cut on Sunday's meeting in order to deal with the supply gains, or the gains in the supply, the builds in supply. You can see oil inventories in the US 4 weeks on the spin building. OPEC's exports themselves are also down, so lack of demand, increasing supply means that they will probably cut production and stop pumping as much barrels of oil, which then in turn causes the price of the asset to rise. Flick across the grid, you can see pretty mixed markets. I mean, not a lot of volatility in the overnight session. Certainly across the equity space, you can see US equity futures slightly higher, but none of them are higher by more than 0.09%, now 0.08, so nothing much to see there. European equities the same, some are a tiny bit down, some are a tiny bit up. Again, not much to see there. Asian stocks, the Asia Pacific region is only up 0.4% overnight, so not really any sort of clear-cut direction within the equity future space. Commodities relatively mixed. Gold and silver slightly higher, oil slightly down. Bonds higher, yields lower, which should be positive for stocks, should cause stocks to rally a bit, but ultimately that's not resulted in too much price movement, but also not much price movement in this way of bonds either. The US dollar is an interesting one overnight. The US dollar has continued lower in the overnight session. That's what we did suggest, but it's hard to look a different way for the US dollar at the moment. Obviously, it doesn't go down in one straight line. You get pullbacks and stuff, but I think any rally in the US dollar should be sold unless anything materially changes. Australian dollar, I think, is an interesting one. The RBA minutes overnight did suggest that the members of the committee thought that one or potentially two more interest rate hikes were on the cards going forward. They said they had to raise interest rates to try and get ahead in order for them not to have to raise aggressively again going forward. So kind of getting a bit ahead of the curve. You'd rather be a bit ahead of the curve than a bit behind the curve. So that's what they did at the last meeting, which is what they said. But one or two more hikes to come, I think, is certainly an interesting one to go forward. So maybe long some Aussie against the US dollar is not a bad idea whatsoever going forward. The key, especially when stocks have some upside. If stocks have some downside, then that trade becomes a little bit more difficult, but kind of on a risk sentiment basis, that should help the Australian dollar, but plus the Aussie against the US dollar. That should it does make sense to me personally for longs at the moment. The Canadian dollar, bearish bets on the Canadian dollar ramp up. They're at 6 month lows. Bets on the Canadian dollar. That was lower oil prices in the previous weeks. Obviously, it popped higher yesterday, but in recent weeks, oil has been trending lower. Canadian dollar trending lower. With that, couple the fact that you've got Canadian inflation today, which is likely to be lower, which is then also likely to keep the Bank of Canada on the sidelines going forward. So if oil prices do reverse and push higher, it makes the Canadian dollar trade a little bit more difficult. If oil does push lower and continues its move lower from previous weeks. Inflation comes in negative. It's a pretty easy sell of the Canadian dollar. The Japanese yen pushing higher. Yields lower helps the Japanese yen higher. So it's a bit of a more kind of normalization of the yield differentials between Japan and the rest of the world. So Japan seeing a bit of upside, although it's got whacked over the course of this year. A bit of upside is a welcome sight for the Bank of Japan. You can see dollar yen trending lower pretty aggressively, but it's just the US dollar move pretty much across the board. You can see your Aussie, Kiwi, Euro and Sterling all pushing higher. Dollar Swiss, dollar yen, the dollar index all pushing lower. Dollar CAD, I suggested bearish bets on the dollar CAD or on the Canadian dollar, pretty lower, the lowest they've been in the last 6 months, so no surprise to see that chopping sideways. Yields continue lower in the US. I keep an eye on this level to the downside, certainly on the 10-year yield, down there at 4.38. Probably be a level but worth keeping an eye on in today's trading session. 2-year yield at the high of this recent range, so if that does push lower, should be supportive for stocks, negative for the dollar. Oil, just a bit of a pullback against the trend. You can see the aggressive move higher off the back of expectations for OPEC to cut supply on Sunday. As long as you don't see any pushback from that, you'd have to imagine oil probably remains supported over the rest of this week. Gold had a bit of a pop higher. Gold a pop higher with yields pushing lower, dollar pushing lower. Absolutely no surprise whatsoever. Equities upside in yesterday's session, which is obviously what we were looking at, and that probably looks set to continue, barring any sort of change to change the sentiment. We're speaking about inflation today out of Canada, likely to keep the Bank of Canada on the sidelines. You got some housing figures as well, both of them expected to be not too good by any stretch of the imagination. Both, monthly housing prices to be down, yearly housing prices to be down. So that is further help to decreasing inflation, but I wouldn't say it's really a help, to be fair. With inflation expected to cool down, Bank of Canada to be kept on the sidelines off the back of that. So not much really changes from yesterday's video. I think maybe oil, not a dip on oil you can buy back into. Keep an eye on that, but certainly dollars lower, stocks higher. Seem the way to play it going forward.